Good morning, team. Hope everybody's doing well on this St. Patrick's Day morning. More importantly, it's Wednesday morning. And what I want to do here is just make a quick video, analyze a few things. You know, they always say a picture's worth 1,000 words, and sometimes just showing the picture, the chart, can really help. So here we go. Here's the spiders. Ran up, reversed down on yesterday, as you can see. And here it is this morning, right there. All right. Down on low volume. Trend is still up, so not a panic situation. The trend is still up. That's the spider. Here's the NASDAQ comp. See that? It's below the 50-day. Above the rising 8-day. NASDAQ comp. Below the 50-day. Gap down below it. Now, am I forecasting it's going to continue falling? No, but I am saying this hit new highs for the move. This isn't, which is why we're not buying a lot of NASDAQ stocks and why we've also been in SSO. It's not doing much right now, but you can see it's leading. Here's SSO, above the rising 8 EMA. Here's QLD, below the 50-day. See? And what does that tell us also? Well, NASDAQ growth, big growth stocks are not doing much. What has that meant for us? You don't see us getting really involved in, Amazon and Facebook, Yeah, Facebook, all right, here it is. And it's coming back, but no real push yet. So what are we doing, team? We're being cautious. We're being cautious. A lot of people have a mindset that the market's open, I have to do something. I used to have that mindset. I'm a professional. I'm sitting here. I'm making money. I know what to do. Yes, I'll find something. Why? No. Let's do it when the wind's at our back. And a good entry and a good trend pays. You just let it work. You let it work and work and work. And you know what I'm talking about. So let's take it a step further, though. I'm going to show you a couple of examples of why it is so important to know the earnings. Here we go. PDD, Pinduoduo. This is the result of earnings. Now, I'd like you to look closely at this chart. By the way, we made good money on this chart before, on this stock, okay? So, looking at this, you can say, well, where? I'll show you where. What do you see there? I call that a clean and simple base breakout. By the way, it was in a top group and sales were up 63% when it was bought. Look at the volume pickup, folks. That's sweet potato pie. Look at the trend. That's what we're after. Look at the walk up to 21.8 EMA. Look at the walk up, the 8 EMA also. And this is the rising 50-day. And it just went. And, then finally you sell some and you get out of the rest. You're not going to get the top. Okay, oh, we're going to sell at the top. No, but you're going to make really good money. I mean, folks, that's dang near a double up there. Now, that's a lie to say we sold up at the top. No. But we were selling some up here. Why? Well, that was a topping tail bar, and this is another one here. And it was losing the moving averages. So there you go. We're going to get what we can. But here's why I'm making this video. Not to point this out, although I do think this is very, very important. What's the takeaway from what I just said? When the market's good, we focus on clean and simple base breakouts, and they pay. Would you risk $1 or $2? I mean, folks, on Intel, what do we lose? Less than $2? Would you risk $2 to maybe make 100? That's stacking the risk reward in your favor. And it's what we do. I will ride trends as long as humanly possible. Why? Because I don't need to think about it and I don't need to work. I let the stock do the work. When I say that, please know, though, I'm not getting complacent. We always have them on the front page. We have alerts set and we monitor them. But here's two I want to show you. Right in here. PDD. PDD. You see this gap down today? We owned this here. Look at this gap down. You know what that was the result of? And I'll enlarge this a bit. You know what this was the result of? This had earnings. This had earnings. But look at this bar. It gapped up and it reversed down on a pickup in volume. A lot of people look at the chart and say, oh, it's a green bar. It's a good. Note the open on this bar and note the close. That's not good. And note the pickup in volume. That's not good at all. All right? You got to be careful with that. Now, here's the other one I want to show you. Hang on, I got an alert going off. TRQ's picking up. There we go. I'm making this video at 10:19 Central Standard Time. So you know this is real time. It's picking up. Let's take a look at the hourly. There's some volume there. Take it to 30-minute. There's some volume there. Market's still a little squirrely. So, if you buy, you be careful. Anyway, let's go on to the next chart, the next lesson. Here's Coop. Look at this. This had earnings. Look at this wicked drop. That hurts. Coop had, by the way, we made a lot of money on Coop before. It's going way back. All right. I'd have to scan, but we won't get into that now. It'd been really good. But look at it now. This had earnings last night. This is what the chart looked like last night. What's the moral of the story? Be careful owning stocks below the 50-day. Be especially careful owning stocks below a falling 50-day. Don't own stocks below the 200-day. That's 30 years of experience talking right there. This can hurt. And it's like, well, it'll be okay. It'll be okay. It'll be okay. Everything's fine. Ouch. There's more. You know what it does? I'll share something with you. From a psychological perspective, and I've done a lot of work on it, I got a degree in that too, okay? Is we must control our emotions. We don't argue with price. We're not day trading. We're not scalping. I'll tell you this, I can't do that, all right? I only know one successful day trader, and he's a VIP, and he's one of my best friends, and I love him, okay? We've done a ton of work together through the years, okay? But overall, please, we don't argue with price. Please don't argue with price. It falls below the 50-day on volume. You're wrong. You're wrong. If you're in it, get out. It loses the 200-day. Look at the volume surge when this thing lost the 200-day, folks. Look at that bar. You're wrong. Don't argue with it. Get out. There were people that bought this up here, and now they're down 100 points. We don't want to do this stuff. And then it had earnings. You don't want to do that. So anyway, I'm not trying to harp. I'm trying to help. My foundation is this. And it's a quote that I heard years ago from a guy when I was up at the football stadium running the track. And I was talking to a gentleman, and he shared this quote with me. He helps kids. Be the person you needed when you were a child. Now, I'm not calling you a child. Please don't take it that way. That's not my point. But we all needed that person to help us. I hope I'm that person that can A, help you make money, but more importantly, instill in us the rules, the tactics, and discipline on how to ride trends, make money, but also how to avoid this, because this would be debilitating. It messes with us financially, but it also messes with us psychologically. And you can get the freeze where you can't do anything. And I'm sure some of you have had it. I know what it's like. So anyway, I just wanted to share that with you. This is for VIPs. I hope it helps you. That's my goal. Help us. Let's make some money. Let's make some money. Let's always control risk. Let's ride trends. There you go. Limit losses. Rock and roll. Let's go.